And good morning. Let's bring in Jim Bullard, the St. Louis Fed president, and to something that Rick said. I think he's a guy who's not ignoring the price index in the GDP report. Jim, good morning, and give us your take on that price index and overall inflation and how much of a concern it is to you out there in St. Louis.
Thanks, Stephen. Thanks for having me. This is, I think the words were hot, hot, hot. We have a lot of inflation in the U.S., more than we expected. If you look at something like core PCE inflation, that's excluding food and energy, measured from a year ago, it's running at about 3.5%. That's more than we expected. Last December, we were saying that number for all of 2021 would be 1.8%. So we're quite a bit higher than we expected. We do have a new framework. We did say that we would allow inflation to run above target for some time, but not this much above target. So I think a lot depends on whether inflation is going to moderate in 2022 or not. I'm a little skeptical that it is. I think we're going to get at least 2.5% inflation in 2022, maybe higher than that, and there's some risk to the upside on that. So for that reason, I think we want to get going on taper, get the taper finished by the end of the first quarter next year, and then we can evaluate what the situation is. We'll be able to see at that point whether inflation has moderated, and in that case, we'll be in great shape. If it hasn't moderated, we're going to have to be more aggressive to contain inflation.
Jim, as I do every Jackson Hole interview, I go back and look at the Jackson Hole interview we did last year, and a couple things stood out. One is it was virtual, like this one is today. Second is that we were in the middle of another surge right there. And third is you said that you would abide a half a point more on inflation, 2.5, but clearly we're above that at 3.5, and your forecast or belief that it's going to spill over into next year. Talk to me about the Delta variant, whether or not you think that is something, this new surge we're having, that should attenuate your desire to taper.
Yeah, it's certainly causing human tragedy and a public health problem in the U.S. But the good news is we do have vaccines. Vaccine take-up is now picking up some in the U.S. Some of Wall Street seems to think that the numbers are rolling over on Delta. I don't really know if we can say that yet, but it will peak at some point. But I think the main message here is that the economy has learned to adapt to the pandemic, and we've produced more national income today than we did before the pandemic. So firms have found ways to produce their goods and services. Households have found ways to consume. Consumption's above the pre-pandemic trend in the U.S. We've got an improving labor market, unemployment down at 5.4%, and will be much lower by the time we get done with the taper. Just a lot of reasons here to think about why we should start rolling back our emergency measures that we put in place in March and April of 2020.
Jim, do you think that actual asset purchases are making things worse? Are they driving up inflation, or are they not part of the solution to the problem? For example, of there being some 5 million jobs fewer than we had before the pandemic.
Yeah, I mean, jobs will be a lagging indicator, and you've got a lot of retirements in there, maybe 2.5 million of retirements. So I wouldn't expect those people to unretire with the equity markets at an all-time high and house prices up 15% from last year. I think that there is some worry that we're doing more damage than helping with the asset purchases, because there is an incipient housing bubble in the U.S. Median house price, at least the number I saw, was approaching 400,000. You're pricing low-income people out of this market, and I'm not sure that's what we want to do. We got into a lot of trouble in the mid-2000s by being too complacent about housing prices. So I think we want to be very careful on that this time around. But the main point I want to make is that I think these asset purchases were very appropriate at the beginning of the pandemic, but now that we've got vaccines and we're bringing this under better control, now it's time to taper these off.